Well, hello, guys. It's Danny Deals coming back at you once again, full force. Like to thank executive producer Hurricane Lopez, supervising producer Stock Heron. We are talking at you on a Tuesday after a long holiday weekend. It is May 30th, 2023. It's 9 a.m. out here on the Pacific Coast. It's noon going into your lunch break out on NYC and the East Coast. Hope it's a great day wherever you are. Hope you guys had a great holiday weekend, enjoyed some time with family and friends. But let's get back to the grind. Of course, if the day ends in a Y, Danny Deals wants to talk to you about SOFI Technologies Inc., ticker symbol SOFI. And, the media narrative has basically flipped 180 degrees. Right after earnings, everything was negative. There were so many questions. Is SoFi going to have to do a dilutive money raise? Are all of SoFi's loans going bad? Does SoFi have no demand for their loans? It's just on and on and on. Is SoFi fudging the numbers that and saying they're going to get to profit in Q4? Just completely disregarding the fact that SoFi has beat, I believe, both top and bottom line every quarter for about 7 quarters, maybe one slight miss in there, but SoFi always under promises and over delivers. That's what makes them very unique among the SPAC companies, among the fintechs. Also, the fact that they have grown the top line consistently through these very tough economic times through the rate increases. They've not only continued to grow the top line, but they've continued to march to profitability. Their stock based compensation has come down versus the EBITDA. And there's absolutely no reason in my mind to doubt when Anthony Noto says they are going to turn a GAAP net profit in Q4. And of course, they're going to turn a GAAP net profit all of next year. There's many, many reasons for that, but over on Motley Fool, of course, they are generally bullish on SoFi, but it's talking about here's why SoFi stock is spiking higher today. So the debt ceiling bill itself is good news for bank stocks and the economy in general, but one provision is good for SoFi. Student loans have been on pause since early 2020, and that will end in August, regardless of what the Supreme Court rules on loan forgiveness. And that loan forgiveness is not going to have a huge effect on SoFi one way or the other. It'll have a marginal effect, but the important thing is that payments are going to start again. SoFi has just over $5 billion in student loans on its balance sheet, but the payment pause hasn't affected private loans like these, just federal loans. The reason investors are cheering is because student loans were a big part of SoFi's business. In fact, it was his main focus just years ago. With borrowers not required to make any payments on federal student loans for more than 3 years, the volume of student loan financing has been extremely small. However, now that payments look set to finally restart, it could be a major growth catalyst for SoFi. There's now more than 1.6 trillion in outstanding student loan that could potentially be refinanced. And this is critical. And with 5.66 million members, more than 5 times the customer base that SoFi had when the pause started. So that is very worth repeating. When the student loan pause started, SoFi now has over 5 times the amount of members. End quote. So there will be plenty of opportunities to cross sell student loan products in the quarters to come. A lot of you, so SoFi right now is up 33 cents or 6%. Volume is heavy, traded almost 32 million shares in the first 2.5 hours of trading. And again, when I say the narrative flipped, there's just a lot of positive articles on SoFi driving deposit growth. They're putting, of course, all the Motley Fool articles as they always do, but others in the media have also turned positive. So, where is SoFi going from here? What is the short interest? Let me just zoom out and tell you very quickly what the shorts have done today. We'll zip on over here, go to live short interest. And today, the borrowed change is going to be only 220,000 shares. They still did short just a bit more. 270 borrowed, 350 returned, so 220 net shorted. So the short actually did increase very slightly today. Live percent of free float on short is 13%. And if we look at the shares on loan, it's 211 million. So there's still a very significant short on the stock, not quite as big as it was just a few days ago, but still very significant. I'm not looking for a huge short squeeze or anything like that, but certainly could be added buying pressure. A lot of you guys want to know, where is the SoFi stock going to go? It's going to go up. I keep telling you that, and people are like, well, it might be, $6 by the end of the year, might be $8 by the end of the year. This stock has been artificially held under 8. In my opinion, it's been shorted under 8, and they've just taken a Miley Cyrus style wrecking ball to the entire short thesis. SoFi's accounting is absolutely fine. Their loans are not going bad. They are holding the loans because they make more money. Recent news with Upstart showed there's tons of demand for personal loans, and there's a lot of demand for SoFi's loans. Everyone is just basically making things up in terms of saying no one wants to buy SoFi's loans. SoFi has some of the highest qualified borrowers in the entire industry, and it defies logic that no one would want to buy these very high quality loans. But in any case, the SoFi stock price has been in this double wedge. If you look at this bottom support line I drew here in purple, um, it's been extremely accurate. Testing back here in May 2022, again September, riding all the way along this line in December, then popping all the way up to test this. And then we got into this shorter term wedge that's lasted, just about the last 5 months. So you see, this has also been very accurate, and it's tested this blue line 3 times, almost exactly. Here in March, here at the beginning of May, and then here in middle of May, and then we've popped up along this green trend line here. So already today we've broken through both wedges, both the long-term and the short-term wedge that I have drawn. I mean, again, wedges, wedgies. It doesn't really prove anything, but these have been very accurate, and the stock has been very controlled. And I'm looking for a breakout here for many reasons, but basically the stock ran into the 20s. Of course, I think that was a bit irrational, but it did that 3 times. It was at that point years away from making profit. And the stock had tons and tons more execution risk back at this time. We're going into COVID. Their entire business plan was in shambles, and management since then has just absolutely crushed it. Pivoting to these personal loans, acquiring some very, very high quality, innovative companies in the mortgage space, the banking space, and a thing I think someone people aren't really talking about enough is this Galileo Technesis company. Noto basically came out and said, "Look, we've been in discussions with 12 major financial institutions, and people are taking that to mean those could be regional banks." There's rumors swirling about a couple of top line premier national banks that might be adopting SoFi's platform to run their entire kit and caboodle. If that's the case, and we start landing some of these big names into the, AWS of fintech, like this is going to be transformative because I've said, people have said, and I have thought also, that perhaps SoFi paid too much for Technesis and Galileo, that they're, relatively small companies to pay that much for. But I think Noto is obviously a lot smarter than me. He has, arguably better hair than me. He doesn't do a phony tail look. It's just very, it's Ronald Reagan hair. It's hair you can trust. It's hair you can sleep well at night knowing it's just there, that even when he sleeps, it's perfectly in place and ready to go. So in any case, I digress, guys. But this stock has run, up into the 20s, up toward 25, and even over 25 3 times. Crashed all the way back down into the fours, and since then they've only been hitting the ball out of the park. They've been doing incredibly well. The march to profitability has been a little bit slower than we probably would have liked, but it certainly has been consistent, and it certainly has been impressive given all the headwinds. And now here we are, guys. Something had to happen in this range. The stock has been consolidating between the mid fours and 8 now for, well over a year, since last April, basically. The stock, actually, since last February, the stock has been sort of trading in this range, consolidating down, consolidating sideways. During that time, there's been a lot of headwinds. People, high interest rates. Well, SoFi's done very well with that. Look at their net interest income. People want to talk about inflation. Hasn't really hurt SoFi. People want to talk about the, bad personal loans. SoFi's loans aren't going bad because they're extremely selective about who they lend to. So all of these bear and short arguments have sort of fallen by the wayside. My theory is they're just sort of taking advantage of the situation with the student loans and the anti-SPAC fervor and all the other things sort of that lined up against SoFi, and they just decided to go after the stock because, obviously other financial institutions don't like SoFi's growth, don't like them taking their customers, and especially don't like them taking their deposits because SoFi's deposits have been growing extremely rapidly. If you guys are Seeking Alpha members, which I highly recommend you become Seeking Alpha members, I'm not sponsored by Seeking Alpha, but I pay for it, and I really, really love the content over there. So, again, just my personal opinion. I know there's a million different websites you can subscribe to, but the authors at Seeking Alpha are the best. Many of them have decades and decades of experience. So, SoFi Rising Above the Noise, May 28, 2023. This is by Stone Fox Capital. Just so you know, you have to look at what you're reading and who wrote it and what kind of credibility they have. Stone Fox Capital, this guy, I don't know him, but Mark Holder, he's been, what you didn't know, he has 25 years investing experience and is a CPA. And if you look, Stone Fox Capital is ranked number 38 out of almost 8,000 bloggers on Tip Ranks and is ranked in the top 200 out of 15,000 experts. So that is top of the top of the top. SoFi continues to refute all claims the digital bank has a loan accounting issue. The student debt moratorium is set to expire within months, leading to another loan growth catalyst. The stock trades close to just 10 times 2024 adjusted EBITDA targets. The stock was discussed in depth with his members. And again, I might join this. I don't know this Outfox the Street. I've read a couple of the articles here, but really looks like good content. I had an opportunity to read this article, and again, I would highly suggest that if you're going to invest in one company for these sort of stock write-ups and experts, I like Seeking Alpha, but again, they are not sponsoring me or giving me anything, but I would highly recommend you give it a try. You can join for like a week for 1 month for like $5 and see how you like it. And if you like it, it's a couple $100, but I think it's worth a lot more than they charge. In any case, guys, the loan issue laid to rest. The prime reason to be negative over the last few months has been related to questions on loan accounting. The issue popped up. They mentioned David Chiaverini from Wedbush, questioned why the fintech didn't sell their loans. And then they go into touchdown Danny Dolev with Mizuho. And, you know, basically he said SoFi was earning a 6.4% yield holding loans versus selling them for less than 5%. So, the market didn't like that analysis, but it seemed to be true. Noto basically said the same thing, but he said it was like 6 versus 4, so an even bigger spread. He said, we have a duty to our shareholders to give them, the best return on capital we can, so that's why we're doing it. The odd part is Upstart Holdings has nearly doubled since the May lows due to them getting a $4 billion investment with Castle Lake, also alluding to another $2 billion worth of funding agreements. As I noted in my previous video, Upstart didn't provide a lot of financial details on these loan agreements, but the deals indicate personal loans are still highly profitable. In fact, Upstart highlighted how their model new loans provide higher yields, again up to 11%. Not worse, like a pending recession might allude to. So SoFi CEO Noto went to the JP Morgan Technology Conference. Noto made it very clear. SoFi takes fair value accounting loss on the current loans of 4.55%, with the current loan loss is only 2.97%. That is key. People are talking about, well, there's this bomb out there. They're going to have all these bad loans. No, they're already writing down 1.5% more than the current losses. So they're taking off 4.55% and the actual losses are only 2.97%. So they're already have a pretty good sized buffer built in there. And if need be, they'll build in a bigger buffer. But right now, perfectly adequate. So back on Q1 2023, SoFi discussed these charges. Company takes fair value accounting um, as follows. And in terms of why we get confident in the sense that we'd be able to sell the loans as they're currently marked, every single quarter we work with a third party valuation firm that marks to market each and every one of our loans on an individual basis to account for changes in every single factor that impacts loans. So that's things like weighted average coupon, default rates, prepayment speeds, benchmark rates, spreads, as well as where secondary bonds and residuals are trading. So you see that mark to market take place every single quarter, and that flows through the revenue line on our profit and loss. Okay, people. In addition, the CEO went on Fast Money with Jim Cramer again to provide his West investment story to what Mr. Noto confirmed holding the loans yields in excess of 6%, while selling those would yield only 4%. So it's like, how can you criticize Noto and SoFi for making the shareholders an extra 2%? It is not that there's no demand for the loans. That is made up FUD, 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 FUD. It's a bunch of crap, folks. This was a pre-planned short attack assisted by an allegedly in my crooked analyst who made those two cuts in concert with the shorts and crashed the stock on purpose. That's my theory. I can't prove it, but that's what I think. Um, Okay, so blah blah blah. He went on Kramer. We all saw this one. If we got through their paywall somehow or saw it on YouTube. So the biggest disappointment regarding the interview, Fast Money again talking about gap profits. Any company should focus on maximizing profits. Yeah, everybody wants to always talk about gap profits, but we're already very solid on an EBITDA basis, and these sort of one-time and temporary charges are, becoming less and less as a percentage of the revenue and the EBITDA as the company continues to grow. So and again, the only question in front of the Supreme Court is whether 400 billion worth of lower income borrower loans will be forgiven. The Biden administration only forgives 20K worth of loans, and the majority of the forgiveness does not impact the target SoFi customer with a FICO score above 680. SoFi has seen student loan originations collapse in the last couple of years. The fintech had ramped up to 2.4 billion worth of loan originations in Q4 2019, and the amount has now slipped below those levels to only 2.4 billion for the or 2.2 billion for the whole year of 2022. So they were, on target to do about 10 billion, a pace to do about 10 billion, and then that slipped all the way down to 2 billion. So you can see just how much that's taken away from their business. The company won't even operate at full capacity until the student loan refinance market normalizes. Takeaway: the key investor takeaway is that SoFi should have the loan accounting issue behind them at this point. The stock hasn't recovered, with SoFi trading just 10 times the adjusted EBITDA, similar to adjusted profits target for 2024, alone with the financial metric will double this year. Also, if you take a look at an article by Stephen Fiorillo, he is probably the foremost expert. You can see him on YouTube, and you can read about him, read his articles here on Seeking Alpha. He also has a blog, I think a webcast. But anywhere you can see this guy, please take a look. SoFi Technologies Noto proves bear thesis wrong again at JP Morgan Fireside Chat. This is May 26th. Guys, I'm not going to run through this. I'm going on and on. Probably very, very few are watching at this point, but if you are, I certainly appreciate you watching this video. Want to send a shout out, of course, to Oprah's Big Wet Cave, who is one of my loyal viewers and a funny, funny guy. You can find him over on StockTwits. Give him a follow. Give him a poke on Friendster if you like. Guys, let's check in with the SoFi stock again, see where we're at. We're up 35 cents, 6.4% on the day. 32.5 million shares traded. So the volume has slowed down, but buying pressure hasn't. I think shorts are starting to cover here because the short thesis has absolutely fallen apart. None of the things they're saying about SoFi are true. SoFi is not in financial trouble. In fact, SoFi has been showing extremely impressive growth and performance through extremely challenging times. Management has been nothing less than stellar with their execution, and not only their execution, but their ability to pivot and be nimble, which is exactly what you want in challenging, uncertain times. So, guys, the ticker symbol is SOFI. The stock is SoFi Technologies Incorporated. This guy is Danny Deals for Hurricane Lopez and Stock Karen. We would like to thank you for watching. A great day for the SoFi investor. Student loans coming back. Debt ceiling deal is at least teed up and on the table. And so we have some hope there that we won't default and everything won't get all catastrophic and stuff. Guys, the SoFi stock I believe is still highly undervalued. I have my price target is $9.75 when the Q4 earnings come out in early 2024. Once those earnings come out, I believe we're going to see a solid net profit. I believe you're going to see this stock already up over $8 at that point and challenging that 975 mark. So, guys, if you can buy SoFi here, if you have any funds left after all the light beer and barbecue you bought over this holiday weekend, I would go ahead and buy a few shares of SoFi if were I you, but of course I'm not. I can't give you financial advice because I don't really know anything, but in any case, I'm buying SoFi. I'm always buying SoFi, and I'm never selling SoFi. That's SoFi. My name's Danny Deals. Thanks for watching. We will talk again at you real soon.